We have had an incredible run in the markets. Where are we going to go from here? I want to talk about that. I am Dr. Stock, Doctor of Education. And should I do more Thanksgiving puns? Yes, please. There's a lot to go through. In this video, we're going to take a look at the markets, SPY, QQQ. We're going to look at the strength of the US dollar, a little bit of the US Treasury yields, and then we're also going to look at the economic reports that are coming up for us to talk about the rest of the month of November. I will tell you later how you can access my Patreon, where you can see my options course, and then also where to get those free stocks from Moomoo. In the meantime, let's get right over to trading economics. And here we're looking at Wednesday, November the 15th. So we got a PPI report on the heels, or just following what we had from CPI report for Tuesday, and that was incredible. And I got to tell you, let me bring this down for just 1 second. Just talked about this in the live stream that I did with the Stock Squad at StockMo's channel. I'll link that down in the description of this video. But CPI, there's a high point on a non-seasonally adjusted basis between August, September, and October, and this one not being at that high peak means that we saw that peak between August and September, which means that for November and December that we can typically on a historical basis expect lower reads to come in for us. Now, seasonal adjustment will even that out a little bit, but as far as the inflationary boogeyman goes, it looks like the work that the Fed has done has been doing its job, and we'll also see with credit tightening how far that goes. I think that this could be a very strong end to the year for us. Now, with that said, let's get back over to trading economics, and we'll see this PPI report. Absolutely excellent on this one as well, that we actually have a reduction in those prices. Retail sales also coming in at negative 0.1%. So that is reduced from the previous month. So always good to see that take place. Tomorrow we have initial jobless claims, and we'll see if that sticks right around that low 200,000 level that we have. We got lots of Fed speeches coming up, and I don't know that they're going to serve as major catalysts unless they start to signal that they are going to do a rate hike anyway, but I can't imagine that happening right now. Right now, it's looking like a near certainty that we don't get any more hikes happening between now and the first cut, which is currently anticipated at least at a 20-ish%, 25-ish% basis to happen as soon as March of this coming year, so 2024. So we're going to be looking for that, and those economic reports are really going to spell that out for us, and is really going to shape that up over time. So we're going to be watching for it. So for Friday, this one kind of goes out quietly for us, and then moving into next week, we have Monday, Tuesday, not really a whole lot. FOMC minutes coming out Tuesday of next week. And now, mind you, this is one of those situations where not a lot of news can be really good news for us. As long as we don't get news that's negative catalyst for us, this market is probably going to go on pretty much uninterrupted. And I'll talk a little bit more about that when we get to the technicals on the charts, but it is something that's most definitely worth noting. Let me put this back up here because I want to get through the end of November as we see it on here. And we have on here stuff about durable goods, the Michigan consumer sentiment, final numbers that we get for that. And then moving into the end of the week and into next week, we actually end, where's the 30th at? It's on Thursday. GDP, second estimate. This one would have to be wildly revised to really change the markets. If we stick right around that 4.9 as forecasted, then that's going to be something that I think the markets aren't really going to move too much on, maybe a little bit up, because that would still show strength of consumer as more data comes in for that second estimate. If that gets significantly lowered, that it wasn't nearly as high as we thought it was, that might be able to drag the markets down a little bit. We're going to have to watch for that one, but it's a little bit nuanced because we also have the Fed, who, if they see that the consumer really is slowing down, that we don't have as much GDP growth as we thought we did, that can be something that could also sort of balance out a little bit of upward pressure, at least as far as the Fed goes, because it starts to destroy their higher for longer circumstance, which I think is one of the main drags that we have. Something we want to watch out for as we move forward from here is the idea that there's over tightening from the Fed and over tightening from credit conditions, which can be something that if it pinches off the economy too much, can start to show signs of too much slowdown. Then we start to get into recessionary talk, and that could be the next main drag that we see possibly happening to the markets, and we'll have to watch that as it unfolds throughout 2024. We'll see if anything like that shapes up along the way. Moving back over here, big date that I want to get to is Thursday, November the 30th, because that's where we have PCE coming in, and we're also looking for a strong read on this one. Strong meaning below consensus, because this is the main one that the Fed looks at, and it's also the last PCE read that we get before the Fed meeting in December, which right now is currently saying no rate hike. And then also the next one after that, no rate hike. I believe it's at the end of January. And then March comes around, and that's where we start to see the first potential for a rate cut coming in. So as far as economic catalyst goes, we don't really have any big things standing in our way between now and the end of November, which can be a very good thing for us. And then December comes along, and I think it's going to be more good news for us. This could possibly be a good end to 2023 for us. So we're going to have to watch for that one. Now, mind you, the top has to come in somewhere, and that's why I want to talk about the technicals on the chart. So let me put this up here. So the chart that we're looking at is SPY, which tracks the S&P 500, and we are currently looking at the weekly chart. So you can see the past 3 weeks that we've had 3 uninterrupted weeks of gains. So if we go all the way back to the week of Monday the 30th, that was almost a 6% week. Last week was about 1.36%, and then this week is already up 2% with 2 more trading days to go. And you can see that we broke out of the top of this trend line that we had going on right here. It could kind of be a megaphone pattern, which could be somewhat bearish, but we broke at the top of it. So we canceled that one. And if we adjust this, let's actually go down to the daily chart to take a look and see what we see there. There we are. And we'll zoom out a little bit more to get more days on here. Where did we peak out on this thing? We actually tied with this peak that's over here, so we actually hit a little bit of resistance. And from this one little candle, man, that little doji candle that we have happening right there, that could tell us that we're slowing down a little bit, maybe seeing a little bit of a loss of momentum. And I think it is important that even though I think that this year could finish strong for us, it could be a very good end of the year for 2023. We want to, sometime sooner than later, we actually want to retest support so we can see where the new bottom is on this thing. I expect it to be a higher low that we've seen going all the way back to, let me put my cursor on this, Friday, October 27th was the low date that we had on the S&P 500, and we've gone up since that time. Let me put the chart back up here so we can see it. We've gone up 9.45% from low to high, going from October the 27th, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days for 10% in the S&P 500. That was an incredible rise that we had, an incredible run. And so for this one, what makes it tough, at least from an options point of view, when we're at the bottom of that, it can be a very clear signal that call options could be appropriate. Well, now that we don't know where the top is, if we want to go long on something like this in those options plays, it starts to make it tough because market bias starts to get a little bit shaky the more that we see all up with no real down following. So it'd be really, really nice to retest support sometime in the near future, find out where we're establishing that bottom, get ourselves reset and repositioned on those trades. Investments are different. Investments we can dollar to cost average at any point in time. Now, I will say that I have played this market in a certain way that it's going to take advantage of the volatility that I expect to see over the next week or two and should pay off handsomely. And I'll talk about that in just a moment. Let me put up QQQ because for this one, we actually get a slightly different look on this where we've actually come back to that July the 19th peak that we had. We actually retested and double peaked with that one, hitting that resistance. So I think it is possible, maybe to close off this week, that we actually start to see some of that profit taking, whether it doesn't happen Thursday, but maybe Friday, or maybe happens Thursday and Friday. I think that would be very helpful and set us up for a really strong week next week. So we're going to have to take a look and see if that's exactly what we get. We do have to remember that next week is a holiday week, and so that's really going to impact the market as well with Thanksgiving coming up in the United States. So we got to remember that that's Thursday of next week, and I believe Black Friday hours are also adjusted for the stock market, so we're going to be watching for that. So where do I think the market goes from here through the end of the year? I think that we're going to end up higher from where we're at right now. At some point in the next 6 weeks of time, I think we'll end up higher than where we're at right now. I do think that we have to come back and retest support and find out where that happens. So on the Qs, where does that happen? Maybe that happens right around, we actually have a couple spots here. We have 380 to fall back on. We have all the way down at 375 to fall back on. And I think that we start to get really firm support right around that 370 level. Now, I don't know that we would get that hard of a fall, but I do think the important thing is that we stay up on top of this channel that we've established right now, that we actually don't come back down and cross all the way back down to where we saw these lows before. And I don't even know that we would even over penetrate into this channel in the first place. So that's very much worth looking at. So a few other things because of what I've tracked in this channel, talking about the strength of the US dollar. If we go back to Friday, the 3rd of November, we had a big drop in DXY, and we also had an incredible day in the markets. If we actually go up to the CPI day, look at that drop that we had. And if we take this down to the hourly charts, look at this. This is also pretty cool to see. If we go back I didn't even need to look at the timestamp. You could tell exactly from where this is at that inflation read that we got from the CPI had a significant impact on the strength of the US dollar, and a weakening dollar is something that is bullish for the markets. I've talked about that in my other videos. So we want that weakened dollar because it makes it easier for the companies that we follow with the stocks to make profits, and is very bullish for those stocks and is bullish for the markets. So let me put this back up here, and we're going to look at the US 10-year Treasury yield on this one, and this is still the hourly chart and still Tuesday, right between at that 8 o'clock hour. So starting at the 8 o'clock hour till 9, that came out at 8:30. So right in the middle of this thing, we can even break this down to a half hour, 30 minutes, and you can see when that happens. Right there is that 8:30 mark. This is exactly when it started. So it happened with the Treasury yields that we saw that drop, and that is a great thing for the markets as well because the yields have been too high. And sometimes people would associate that differently, that what we would see is a drop in the yields because there's a flight to safety and a purchasing of those bonds. The bigger fear right now, the reason that it's bullish to see those Treasury yields drop as we have, is because the question of the United States being able to service their debts is that difficult part. And where is that important? That's because of the possible downgrade that we could see from Moody's if the United States continues on down a bad path, because we just saw that the outlook got changed from stable with the AAA rating down to being negative with that AAA rating. So we did not yet get the credit downgrade, but that could happen down to AA+, and that would not be great for the markets. That would be pretty terrible for the markets. That would probably lose several percent over the following days after on the first day that we got the downgrade and the next few days following that downgrade, should that happen, because that could mean that things are seriously awry, and we definitely don't want to be in a situation where it's even possible that we want to be talking about the US defaulting on their debt, because that would get very, very ugly very, very soon. So I told you that I would tell you how I'm playing this market. You can see how I'm playing this market by going to the Patreon. That link is down in the description. I post my buys and sells over at the Discord that's available through the Patreon. I also have an options course that I'm building out over there, and also free stocks from Moomoo. You get up to 16 free stocks from Moomoo by using my link. Now, there's a really big thing that I want to share with you about Moomoo. They actually went down. They don't have it on their page right now, but they actually switched over to having free commission on a lot of the options trades that are out there. And I can tell you, through a lot of other brokerages, it costs like 65 cents per options trade. So that means it costs you $1.30 between getting in and getting out per contract that you do for that options trade. And Moomoo switching that down to 0 is absolutely huge. So my link for that down in the description. I use it for my options trades. You'll see them if you come over to the Patreon and then jump over to the Discord through that. You'll see those in my buys and sells as well. Now, how am I playing this market? Well, with the fact that we've had so much up and we don't know where the top is, and we also don't know when this thing's going to reverse course, one thing that I've done to take advantage of the situation is I've actually put out strangle plays where I've gone to either side, and TQQQ. Actually, let me put the chart up there for you. There we are. So TQQQ, where this has gone right now is that it's between $42 and $43 per share. So what I've done with this strangle is I've actually gone down to 42 and up to 43. So I'm on either side of that. So 42 and down, that's my put, 43 and up for my call that I have. And all I need over the next 30 days to break even just by intrinsic value. So if you know options, then you know what I'm talking about. And if you don't know options, check out my options course through that Patreon. All I need is a 3 to 4% move to happen with QQQ, so which tracks the NASDAQ 100, 3 to 4% in that, and then I break even on the intrinsic value itself, and then there's also the time value on top of it, which then would be icing on the cake. Should it move more than that over the next 30 days, then that is all just gravy. That makes me even more money on that play. Now, for strangles, you're not going to make as much money as you would if you were to pick a single direction, but let's say that I went long on this, and then we decide to retest support and it drops, well, then I'm at a lot of money. Or I went short on this and the market continues to keep on railing up on me and just blows well beyond the top of where I thought it would be before retesting support, well, then I'd be out a lot of money. With the strangle, I can play both sides of it, and that would allow me to benefit. I could go farther out with the expiration date, farther out than December the 15th like I've chosen, but the reason I chose that is that over that 30-day time period, I fully expect that we get that 3 to 4% change in the price in QQQ at some point in time over the next 30 calendar days that we have. So I think there's enough trading days in between that we're going to see that difference. And that's one of those ways that I'm playing that market. And then if you want to see my other buys and sells, the link's down in the description for the Patreon. Come on over and join us. We'd absolutely love to have you. I got a wonderful community over there. And also my NVIDIA stock price prediction and earnings projection that I will be updating. I'll be putting up on the Patreon a special video for my Patreon members along with the spreadsheet that goes along with it for the earnings forecast through 2028, I believe I have it. And then also the stock price prediction that goes along with that as well. Thank you guys for watching this video. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.